If you're not sure what's been going on in the market, or you just want to know more about trading and what we do here in Riz, you have come to the right place. Welcome to our weekly market recap webinar. I'm Chris, and I have the man himself, Rizwan Memon, in the house. How you doing tonight, Riz?
I am doing well, Chris. Thanks for having me on.
Awesome, spectacular. And guys, I want to make sure if you're watching this on YouTube, please make sure you go down below, click that like button, and hit the subscribe button and the bell icon right next to it so you get notified every time we upload new content here on the channel. And for all of our elite members who are here live, thank you so much for joining us. It's always a pleasure to have everybody here and join and just have some time together to talk about the markets and about what's going on. And speaking of the market, here it is. So it was an interesting week in the S&P 500, to say the least. Now, obviously, Monday was a lot of uncertainty going on. We had the Valentine's Day dip here. That's not a real thing. I just made that up, by the way. But we had this deep selling day, went way below the 4,400 support level, and it was bought right back up. And we closed the day basically sitting right on support. We bounced up more and made it looks like we were making a push on Wednesday and Thursday, but man, Thursday and Friday we just kind of tanked pretty hard, and we just blew through this support level at 4,400 like it wasn't even there. Closed on Friday at 4348.88 on the S&P 500. Riz, what do you see is going on here with the market? Is this just like fear with everything going on in Eastern Europe and inflation, or is there something else going on?
Yeah, three things. Well, actually four, if I want to be really specific. A few of them should not be a surprise to anyone. Sorry, I'm getting tangled up here. But really, four things. So, number one, I'm going to go in from order of importance, so to speak. Number one, right now, obviously, is the European, Eastern European kind of crisis, so to speak, or let's just call it for what it is, the conflict between Russia and Ukraine. So it shouldn't come as a surprise to anyone. Anytime these headlines of February 16th is the day Russia is going to invade, or this weekend is when Russia is going to invade, or Russia is, bringing troops closer to the border, or Russia is pulling back troops or adding troops, or President Biden has gotten on a call with Vladimir Putin and wagged his finger, or something like that. Anytime you hear something, it's it's something that the market is always antsy about. We've seen some press conferences from President Biden. We've seen obviously some talk from the officials in the White House, plus some of the officials and those close to Vladimir Putin as well. And they're both sides are just kind of like, talking and talking. So this has caused the market a lot of angst. It's caused it a lot of uncertainty. And we know, as we always say, markets don't like uncertainty, period. So this is one. And the fact that this continues to go on isn't ideal. Of course, for anyone, but hey, here we are, right? And it's not something that we can um, magically change ourselves. It's not up to us. But we are just at the mercy of what's going on and something that we're not in control. So that's number one. Number two, obviously, shouldn't be coming as a surprise, is interest rates. We are now past the middle of February. I think the next Fed meeting is in the middle of March. Don't quote me, but somewhere around then. And I believe pretty much anyone and everyone has pretty much factored in the first rate hike to be next month, right? And right now, based on the chatter and the little birdies that have been speaking to me, are saying probably 25 basis points. We don't see the Fed going 50 basis points just yet. So that is something to keep in mind. 25 basis points is kind of being factored in next month, March, okay? Number three, we have inflation, obviously 7.5% annualized inflation. Not a fun number. It's one of the highest it's been, in what, 40 years now, I believe. So, yeah, since the 80s. So we're monitoring that, and obviously so is everyone else. So that's not something that everyone is happy about. But we're gonna have to see how rate hikes and the amount of rate hikes how that impacts the inflation numbers coming out subsequently. And fourth, last but not least, is the Treasury bond yields, right? Bond yields and inflation, interest rates are kind of linked together, but I'm kind of separating them because, we've seen the bond yields go up to like near 2% for the 10-year, and, the market is in retrospect, when we look at bond yields, anytime bond yields go up, we see a correlation between bonds yields going up and tech, high growth, high multiple stocks coming down. And obviously that's not helped with interest rate increases. So there's a little bit of piggybacking there between those two, interest rates and bond yields, which are obviously, relevant to each other, but still those four things. Okay, so to refresh, number one, Russia-Ukraine conflict. Number two, interest rate hikes, specifically how many there will be this year and what amount. 25 basis points is what the market right now is expecting in March for the first one. And number three is inflation. And number four is the bond yield. Bond yield going up is essentially, a flight. It just essentially means that people are taking risk off because yields go up when bond prices go down, right? So something to consider. And I feel from a technical standpoint, I've said this before, the 4,300 level, Chris, as you already have up, which is great, is the next kind of area to keep an eye on. I feel like this is a bit deja vu. Well, because it is, because we have been at the 4,300 level before. And that was, middle of January, Chris, I think? Yeah, I think it's middle of, yeah, probably end of January. Okay. Yeah, near the end of January. So, yeah, something to keep in mind is a bit, I would say, unfortunate, if you want to, if I may say that word for this. I'm not sure if it applies, but ultimately I feel like, what, no one wants this. It's not ideal, but hey, it is what it is. So we have to go with the situation. We have to, keep our wits about us, not panic, not lose our shit, so to speak, and, be more cautious. Be more cautious. I'm glad that I took some positions off, leading up to the 4,500, 4,600 level. And I said, look, that 4,600 level is very key. We took some positions off. Obviously, I then entered some new positions as well. And I can say right now, I have a total of, about 10 positions in the trading account, as I see, obviously, that people in Elite are aware of. So total 10 long stock positions. I won't go into them on this webinar here because it's primarily for Elite members only. But you know what? We can touch on a couple recent additions from this week later on.
Awesome. Thank you for that insight on there. And just so everybody knows, because I know sometimes people don't understand basis points, it's just a different version of a percentage. So 25 basis points is 0.25% rate increase is what they're talking about from the Fed, just so everybody's aware of that. I posted that in the chat here, but of course you can't see that on the recording. Let's go ahead and move over to the S&P 500 and kind of break it down, kind of see where we're at here. Energy still riding high on the the price hike in oil, which we'll touch on here in a little bit. Financials really just kind of hovering around the zero mark, and everything else is negative on the year so far. Leading the way is tech and real estate, both underperforming the S&P 500. The S&P 500 itself is down over 9% right now. And then healthcare is right behind it at 8.5%, and then utilities is kind of flat at the moment at about negative 6.5%. If we go ahead and pull that out, from a year, just to kind of see where we're at from a yearly standpoint as opposed to from the 1st of January, we see energy making this huge run here with this push in oil. And, at this point now from the last trading year, S&P 500 basically sitting at about 6%. Riz, is there anything here that you find interesting? I mean, I feel like kind of a broken record. We haven't seen too much movement this year.
Yeah, no, it's something to keep an eye on. We had touched it when the market hit the 4,300 level at the end of January. Is the 10%, negative 10% from the highs is something that we want to keep an eye on. Chris, if we can flip back to the S&P 500 chart, I want to see where we are from the highs in terms of drawdowns right now. Because I remember we had just touched 10% and we picked back up. So here we are, just at 10%, right? Look at that, right, guys? So hopefully you're impressed with, with my memory.
I'm impressed. I mean, that was impressive math right there on the fly.
Honestly, this is what it takes. This is what it takes. But you know what? All jokes aside, 10%. So we're right at that correction territory. Okay. So just a reminder, obviously, all you guys, amazing, wonderful people in Elite, are obviously, on 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 the ball with this. So you know that 10% represents a correction, 10% from peak, and it's not a crash, and it's not a bear market. Yet, and fingers crossed, right? For those of us that have long positions. Uh, so yes, something to keep in mind. We're right at that 10% from the highest mark. So it's an important period in markets that we're in right now, and this is where the money will be made. Okay, just like I said this similar when I said it back in 2020. This is where the money is made, not when markets are only just up and up. Okay, because that's not normal, that's not natural. And I'll say it again. We know that markets usually have, on average, approximately 10% decline a year. Okay, so something to keep in mind in terms of stats and market movements.
And guys, I think this is important to touch on because the people in the media love to use words like recession, bear market, things like that, and we are not there yet, guys. By no stretch of the imagination are we there yet. So it's just a correction at this point. I want to make sure that there's a distinction between that because you get these hype words thrown around a lot, quite a bit on the media or alternative media, whatever you listen to, and it can be kind of scary if you don't know what's actually going on. So I mean, it's a very important thing to understand where we're at. And guys, this is how you make money in the market. You buy low and sell high. To buy low, that means the market has to go down at some point. So it's not something to be scared of at this point. We just got to be ready to go when the moment is ready. Really, what it comes down to. All right, let's take a look here at the asset classes. Oil made this huge run up. Looked like it was going to hit $100 a barrel, but we kind of stopped short here on Valentine's Day, making the high for oil this year so far at 95.82 per barrel. That's I did not expect to see that anytime soon. But then we've kind of started pulling back a little bit here for the rest of the week. Riz, where do you see oil going at this point?
Yeah, I said this in the last webinar, and I said, you know what? Realistically, if all else equal, okay, again, we don't see a war between Russia and Ukraine, I think oil can still get to 100. If we see a war between Russia and Ukraine, oh God, I mean, obviously, I hope that never happens, but from an oil standpoint, yeah, I think we could see 110, 120 maybe, right? So all else equal, no invasion, no war. Um, and in a vacuum, I think, 90 to $100 oil is suitable right now simply because demand outpaces supply. It's been a pretty heavy winter, so to speak. For those of you in the winter months or in countries geographically that have heavy winter, heavy snowfall. That's the way it's been over here where I am. So that also plays an impact in oil consumption, natural gas consumption, so on and so forth. So it's something to keep in mind. I don't think we're going to see like $70 a barrel anytime soon, unless OPEC steps in, or if maybe we see a potential Iran deal. That's one thing that I think the market isn't factoring in just yet. So my theory is that if the U.S. and Iran strike up a deal similar to how they had done back in um, the Obama years, and politics aside, what that did was it kind of controlled what Iran was able to do in terms of nuclear um, energy. It kind of let them have a little bit of wiggle room, but made sure that they were in compliance. And as a result, the sanctions on their natural resources like oil and so on and so forth were eased. So that deal was taken off by President Trump back. I can't remember exactly what year, but it was taken off and essentially nullified. Um, and perhaps and those sanctions put back on. But perhaps, we could see something return in terms of a deal with Iran in this current administration. And I have no doubt that if something does happen, you can bet your last dollar that oil will be a part of that negotiation process. And how could that look? That could be that the U.S. earmarks a certain amount of barrels per day from Iran and takes their supply for whatever dollar amount. And it doesn't even really matter what dollar amount. They just need that supply in the market to bring oil prices down, because we know that oil prices at the pump, gas prices, sorry, at the pump are a big factor in inflation, right? So consumer inflation. So yeah, we're in a bit of a pickle here. Which way do we want it? Do we want a stronger U.S. dollar, weaker oil, higher oil, weaker U.S. dollar? We want lower inflation, lower gas prices. Which way do we want it? We can't have it all, right? Do we want lower rates, but then we're going to have higher inflation? Do you want higher rates and lower inflation? It just depends what side of the camp you fit in. So yeah, pretty unprecedented. I've never kind of been at this exact point in my life. I don't think anyone has. Whether you're Warren Buffett or it doesn't really matter. So it's all new. It's all unprecedented. So if you've heard me say that before, we're in unprecedented, uncharted territory. Well, I think I've been saying that for the last 2+ years, and I think it still stands true, which is pretty wild, if you ask me.
Absolutely. No, I think that's really important to understand that, it's give and take from both sides. You can't have your cake and eat it too, which makes me question why you would buy cake in the first place if you can't eat it. But that's what the saying is. And, in this case, it's really a decision on how do you want it to go. And that's something that we have to see how things play out. Now, one asset that has been said to have been a hedge against inflation, which hasn't been recently, is gold. But gold seems to be kind of making a bit of a bullish run here, but still in this channel that we've been in for, since 2021, so well over a year now. Really, gold has just been trading sideways. Riz, with this current run-up in gold, do you see, that changing, or do you think we're just going to start coming back down again here soon?
Yeah, this is a bit interesting. I didn't forecast this run up into the 1900 area. It's not some crazy move yet, but yeah, you know what? I personally feel like gold is a little bit pointless in this kind of day and age. But hey, you know what? It's been holding the 1800 levels strongly. It's had a nice little move, so it's interesting. Something I keep an eye on, but not something that I'm looking to take a position in, or even short or anything like that.
Awesome. Now, something that some people think might be gold, but others think might be a little bit hocus pocus, is Bitcoin. Bitcoin had quite the rundown here from the highs at the end of, or actually the beginning of November last year. Big drop in Bitcoin, but we did break out here on the 5th of February, and we kind of seem to be following the market a little bit. If you go back here, you'll kind of see this pattern here repeating itself in Bitcoin. As we're seeing the S&P 500, though Bitcoin seems to be hovering right around 40,000 right now. Riz, with all the talk about cryptocurrency and stuff like that in the markets, on even up there in Canada, I heard that with what Trudeau did with the emergency powers, they're looking to try and curtail the use of Bitcoin depending on how you're using it and what causes you're sending it to. Is this cause for concern, or do you think that Bitcoin will still be, completely decentralized?
Yeah, no, I think so. To sort of clarify, the kind of crackdown they've done is primarily due to the Freedom Convoy or the trucker convoy, whatever you want to call it, right? It's because they were blocking the road, and they weren't kind of, I'm not going to get into the whole political aspect of that thing, but the whole point is they use these emergency kind of powers, and whether you agree with it or not, the whole point is to curtail the funding. So because if you remember, or maybe you don't, or maybe some of you have been paying attention, there was a GoFundMe for this trucker convoy, and they raised a good amount of money but then GoFundMe turned that off and like essentially refunded all the money back because it broke their terms of use. And so their funding was kind of cut dry. So, the Canadian government, the federal government, kind of stepped in eventually because they were blocking the roads, blocking the highways, blocking the border. And you may recall, many companies on both sides of the border shut off production, and they were like, guys, the authorities need to get involved because imagine, you have companies like Toyota and GM and Ford who cut production, who stopped already there's a production problem, and then this made it a little bit worse. So they were pleading with the authorities on both sides, Canada and U.S., to kind of intervene and stop this blockade. So yeah, most of it's been eased, but there is a little bit of it's still there. And one of the ways they did that was to essentially freeze and halt money being moved to and out of these uh, anything to do with the convoy, right? And that applies to fiat, Canadian dollar, U.S. dollar, but also crypto in a way. I mean, it's very hard to do that reasonably when it comes to crypto on a mass scale, but with bank accounts, they have been able to mandate some of the banks to freeze um, some of these high risk individuals that are part of this convoy and freeze their accounts, people that they've arrested, and so on and so forth.
Yeah, so we'll kind of have to keep an eye on that. That will be interesting to say the least. And yeah, Bitcoin really just kind of hovering here right around this 40,000 level.
I don't, I don't,
Yeah,
think it's gonna, I don't think it's going to matter. It doesn't really matter in the grand scheme of things in the price of Bitcoin. I don't think that's really anything to do with it. With this kind of little pullback to 40,000. I think this is just we've seen a big correlation between markets and Bitcoin. So when we see markets tank and drop, like we did last week, we see Bitcoin do a little bit of the same. So back in early days when crypto was all the rage, and and I mean 2018, 2019, and so on and so forth, people were saying, well, crypto is a nice hedge and it's inversely correlated. Well, no, it's not. It's actually very highly correlated to uh, the U.S. markets, to tech stocks, to equities. So, stock market goes down, we usually see crypto goes down as well. So that's something to keep in mind. There is actually a positive correlation, not an inverse correlation.
all right, so you had mentioned this earlier about a couple positions that we had taken this week, and I wanted to touch on those real quick, just kind of give some folks, for our elite members, a little bit of updates. So there were two that we got into this week, and if you're an elite, you should be familiar with these names. These are pretty popular here in elite. First off is going to be Square. Now, SQ, which I guess is now Block Incorporated, cool. Big, downtrend here since, let's see, October of last year. But it looks like it may be forming a bit of a base here. We got in on the 14th, so happy Valentine's Day to SQ. Obviously, we're a bit down on this position so far. Riz, what are you seeing here for SQ?
Yeah, so I got in a little bit early with a little bit more of a speculative position to wait and see. Nothing too large, nothing too heavy. Primarily because of the market environment, but also because earnings are coming too, and we know earnings are like a big catalyst, and they can obviously kind of be very much up in the air as to what the results are and what the post-release move in the prices. So I'm cautious, but I am optimistic. This is way, way oversold, way undervalued from a sort of a valuation standpoint compared to the last 2, 3 years of revenue generated, right, and the growth. So the market has completely discounted it. Chris, I think what does this come down to in terms of the price? What is this, like 2019 levels now, I think, or early 2020? Yeah. So
Let's
this
take a look.
is yeah, this is
Yeah, so kind of like, yeah, 2018
like
levels.
even the first touch point there in 2020. Where does that go to? If we go
So the first,
2020, yeah,
yeah, like
2019.
2018 actually. Back in October 2018 is when we are at this level first for
Yeah,
SQ,
yeah.
and then it looks like we got back to it again in 2020.
Wow, it's a June, right? Yeah. Okay.
Yep.
So Yeah, last time it was here was in June 2020. So that's, that's literally just shy of 2 years taken off of growth and revenues generated. So the market is very much punishing stocks like these. And it's not just Square, as we'll see in the next one, right? So I'm carrying this, not too worried about it. It's okay. It's not too large of a position, and I mentioned that elite as well.
Absolutely. And the second one is one that Riz has been somewhat outspoken of in the past is going to be Shopify. So Shopify getting absolutely hammered here post earnings, and even before then, really selling off hard. And we went ahead and got in this right around 673, and that's just to let you guys know where we got in at. Not suggesting that you go ahead and take it, but this is our position. And so looks like Shopify may be finding some buying pressure down here around in this 650 area.
Yep, yep. That kind of doji type candle there is something to keep an eye on. We already got done with the earnings catalyst. The earnings were not too bad. It was just a guidance and also the current market environment that isn't too favorable. And I think this is down to what, Chris? The last time it was at 700 was when exactly? Or like 650.
Back in May of last year, or May of 20, excuse me.
2020 again. So
Mm-hmm.
here we go. 2 years taken off. And Shopify's fundamentals actually, I can't believe I'm saying this, actually look great at this price point from a valuation standpoint.
Oh,
So
yeah.
yeah, I think like the PE ratio right now is like 28. Like, wow, what the heck? That's crazy, right? So I never thought I would see, a time where, Shopify goes from what, 16, $1,700 a share to 650-ish. Like, wow. And that too in a relatively short amount of time. In what, 3 months? Whew.
Yeah.
It's brutal. It's brutal if you've been holding growth stocks, small or large. So here we are. And I think once things normalize, I'm not saying that, Shopify deserves or should be back at 1700. What I'm saying is that there's opportunities abound if you have the patience, if you have the risk tolerance and the stomach for it. And personally, I can't speak for everyone, but personally I do. So yeah, I look forward to seeing how these things shake out. It's going to take some time, but man, if Shopify were, you know, $50 a share, $100 a share, or $200 a share, hell no. For what the kind of company is now, you know what? I think it's beyond undervalued. And obviously, even when you look at the RSI and the chart, obviously you can see it's very much oversold.
Yeah, definitely. Absolutely. It is very oversold looking here at the RSI. Now, for everybody here live, now's the time for Q&A. I want to go ahead and start posting those in the chat, but I did get a PM from Nico. So thank you, Nico, for PMing. And this one's specifically for you, Riz, and you're going to have to take the reins on this one because, well, I just have certain thoughts about these things. He says, what are your thoughts on the poor man's covered call in general? More specifically in these times, as there are good opportunities we may not want to miss out on, and with a far dated in the money call, we can get past this uncertainty right now. Does that make sense? Does it make sense to buy a really like a deep in the money call that's maybe a year out, or is that something that you wouldn't advise?
Yeah. So you know what? It's a solid strategy. Again, almost anything can be a solid strategy unless it's completely bonkers, like only trading like zero data expiry stocks options. But usually, the poor man covered call essentially is something that's reasonable. I think it comes down to the individual's risk tolerance if they're okay with, the investment taken for the options, and if they have the time frame, because obviously it's a 1 year contract, but the whole point of it is you get to use smaller amounts of capital to have exposure to a stock while hopefully generating some income via covered calls because that in the money 1 year out leap or 1 year out contract acts as collateral. So it may sound a bit gibberish, it may sound complex, and that's okay to those of you watching, but ultimately to answer Nico, yes, it's viable. It's definitely viable, especially in an environment like this. I think it makes sense where everything is kind of way beyond oversold. And if we get a recovery, it could be a really nice recovery, whatever that may be. And if that happens in a nice timeline and it happens before the 1 year mark, yeah, you stand to do really well.
Awesome. Thank you for that. All right. Yas wants to talk about Walmart. Obviously, one of my personal favorites. So, Yas said he exited his Walmart position around 139 last week. What are your thoughts on re entering? And in my opinion, 136 is a great area to look at getting in on Walmart. But definitely a lot of uncertainty here on Friday. Riz, what are your feelings on this?
Yeah, a little bit uncertainty, but they had great earnings. They obviously had a nice rally post earnings. Again, this is something I mentioned to elite members to keep an eye on. I thought it was a great. In fact, I mentioned on the previous webinar where someone asked about Target, and I said maybe you want to consider Walmart instead. And here we are. So yeah, I don't personally have a position in my trading account on this, but I do. What do I do? I do have a position in Alpha, I think. Let me confirm. Just want to confirm. I know it's not. Yeah, I do have a position in Alpha. So again, something different. If you're wondering what Alpha is, well, you click on the link below to get some idea in the description. But yeah, I have a position in Alpha, but not in Elite. I don't have a swing trade type position on it. I think it's a great company. I think if we see a pullback below, 137 or so, I think it'd be a great time to enter. But let's see, it depends on your time horizon. For long-term buy and hold, buy and forget type of thing for the next few months, over a year, yeah, I think it's great to get in now even.
Yeah, Walmart, really, really solid company. You won't be disappointed holding that. Plus, we got dividend coming up here in looks like about a month. Yeah, about the middle of March. So can't complain about that.
Over half a dollar,
Yep.
56 cents, per share. I think that's solid,
Very
so.
solid dividend. All right, Gary says he's been away for a little while. I'm so glad you're back, Gary. Good to have you back. Wants to know what's going on with Facebook, aka Meta. Yeah, Facebook getting absolutely slaughtered post earnings here. Wanted to know whether he thought this was maybe a buy or a wait and see.
Yeah, great question. So Facebook is one that I have a position currently in actually both Alpha and Elite. So that should give you a bit of an idea. I have a position in it, and I think it's a great entry point so long as you do your due diligence on what the company has been going through. So they had earnings where it was not the best, and those numbers don't really they don't really paint the whole picture. So it's something that I'll leave for you to kind of look up. And ultimately, it comes down to, do you believe in what Meta, aka Facebook, is really doing in terms of management, in terms of their whole metaverse play, in terms of their, let's say, what's the word? I'm blanking on the word, but their implementation of it. Are they going to be able to implement and really see this to the end? And that's really what on everyone's mind. Has Mark Zuckerberg lost his fucking mind? Well, that remains to be seen. So yeah, you know what? I think if you have the stomach for it, consider maybe looking into what's happened in the last couple of years first, and then you can definitely consider if it's suitable for your position. But transparently, I can tell you I have a position.
I have a position too, so for everybody holding, I'm right there with you, right alongside Riz.
Right on. Right
All
on.
right, all right. Tom wants to know: is BRK-B a good inflationary play? Well, let's take a look here.
Just type in Berkshire. Berkshire, you'll get it.
Would help if I could type. Okay, it's
Yeah.
yeah, dot, not dash.
Yeah. So man, you can't go wrong with Berkshire. And you're right, Tom. In terms of inflation play, they've held up really nicely. Look at it, like compared to how the markets move. This is a low beta stock, meaning it doesn't move as heavily as the market or in line with the market. So that's good. It gives you a little bit of protection. But personally, I'm always a bit gun shy of buying, near these kind of levels. And of course, we have earnings coming too. But the big thing is, I'm always more interested and a lot more comfortable buying when I see a stock, revert to the mean, so to speak. So what does that mean in English? really, if it comes down towards the 300 area, so to speak, right? So it's definitely a fantastic company, obviously, but personally, I would rather put my money in things like Walmart, in specific um, consumer staples type of companies, and for cash flowing assets. That's me personally. Pepsi is also great. And there's a bunch. There's plenty of choices out there. Pepsi is good too. Right at that 90-day moving average that Chris has. So yeah, and the dividend coming too, right? So that's my personal opinion.
Awesome, thank you. Bella says, hi, Chris and Riz. Hey, Bella, good to see you. Wondering what our thoughts are on PayPal. Yeah, this is a good one. Wanted to
Yeah,
know if we were going to book the loss or we're going to hang, or what the plan was. So yeah,
yeah,
PayPal getting slaughtered post earnings.
yeah. This is another one. Completely decimated. I mean, there's insiders and funds that have been buying this at these levels. Nothing extraordinary. Like there's no, like Bill Ackman type of move coming in and buying $1 billion worth like he did with Netflix. But there has been institutional and insider transactions in this. This already was, I feel, undervalued and overbeaten and just oversold. It is now even more so. It's like the RSI it can't even compute. It's just fallen way below the 30 line, right? And then the 20. So without a doubt, this is way overdone. I did consider closing it. I pretty much lost patience in it. But I went back, I looked at it, did a little bit of analysis again, really asked myself, am I okay with, A, one, taking the loss, B, moving on from the trade, and three, has my thesis changed? My thesis hasn't changed. I'm just disappointed that um, the market is really very, very looking at this very, very unfavorably, and more so than anything else. I think if there's one tech stock that's decent, that actually is profitable, and is way beyond decimated, it's this one. Period. Okay. Yeah, Shop is a great opportunity, and yeah, obviously Square and all that. But if there's one that's been completely decimated, um, and completely, marked down, I think it's this one. So personally, I looked at that and I thought, you know what, I'm okay giving it more time. I think the next 2 quarters are going to be very important because one of the reasons it's dropped so far is because the I think it's a year ago, where they kind of moved on from that eBay partnership. eBay partnership was a big part of their revenue stream. So when they kind of cut that exclusivity, part of their revenue went away. So the market's always comparing to historical year over year revenues and profits. So once those eBay numbers have moved on from, once we've moved on from that, once we kind of have gotten past that hump, I think obviously, factoring in the markets normalize and whatnot, I think this has the opportunity to just recover. Does it mean go back to, 225? Forget 260, 280. Forget that. To even go back to 225 anytime soon? No. But to even, come back to 160, to go up to 170, 180, I think it can. I think it definitely can. Again, this has to very much do with your personal um, risk tolerance. Do you have the same thesis as I do? Do you believe in it like I do? Like I can take a stock and I can have conviction in it, and the stock can be great, but someone else could take the same trade and not have as much conviction, not have as much belief or patience as I do. And that's completely okay because that person is a different person. They're a different investor. They're a different trader. They have a different risk tolerance and time horizon to me. So that's okay, but it's very important to kind of do a little bit of an analysis and self-assessment on what this stock and what this holding um, means and is representative to you. For me, yeah, it's a big blow. It's not ideal. It's not nice losing money and being down, a significant chunk in dollar amount, but also percentage amounts on this. But hey, I'm okay to give it time. I don't even really bother with the day in and day out kind of movements with this.
Yeah, absolutely. I mean, PayPal has really been hit hard lately, and I have to agree, it's way overdone at this point, way overdone. And that doesn't mean it's going to jump back up here in the next month, but I think we need to give it some more time for sure. Yas wants to know, is J&J a good entry for a long-term hold? Well, let's take a look at good old Johnson & Johnson here.
Yeah.
All
No,
right.
this is a great one. This is a great company. I can't fault anyone for wanting to take a nice long-term hold on this. One of the best, consumer staple, consumer discretionary type companies on the market. The dividends coming too. It's had a nice little bit of a dip. It's below its all-time highs. I think the 660 to 660 area is a nice key support area. You know what? I think I can't fault anyone, like I said, for getting in long on this, whether it's for long term or even a medium term type of trade. Yeah, absolutely. From a pure technical standpoint, I don't know why anyone would only take a technical standpoint on something like Johnson and Johnson, but to purely look at it from a technical standpoint, they would say, someone who's solely reliant on that would say, maybe wait till 162. If it breaks below 162, wait till 158, 157, 50. You know what? Yeah, maybe it happened, maybe it doesn't. I think it's not a bad idea to make an entry, maybe scale in if you think so. But yeah, I don't think there's any scenario where someone tells me they got into Johnson and Johnson, and I'm like, oh no, bad choice, bad decision. No, I just feel like it comes down to persons what they want out of the trade, right? Like, are they looking for faster movers? Are they looking for a purely technical standpoint? Then this is a little bit different. But if they're looking at that good combination of a fantastic company in the right kind of company, a nice legacy consumer staple slash consumer discretionary company that's gonna weather any and every single storm, economic or market related. Yeah, this is one of them.
Really sweet dividend as well for holding long term. I mean, well over $1. Buck 06 was just on Friday. Looks like was the ex dividend date. So. Really nice dividend there for J&J. Can't fault you for that for certain. All right, well, let's go ahead and close it up. We're coming up on an hour here, just a little bit short of it. Let's talk real quick. Riz, what are you looking at this week? What's on your horizon, or are there things in the market that's going on that you want to keep an eye on?
Yeah, good question. I mean, honestly, I have a really nice, I would say, a portfolio stack of positions. I think right now it's interesting. Obviously, if there's a few off the top of my head that I don't have a position in that are really appealing to me, are Microsoft and Google. Obviously, there may not be everyone else's cup of tea, but these two juggernauts, these two amazing cash flowing market leaders, sector and industry leaders, I think are a fantastic buy and hold for months, if not years. Uh, Now, from a more of a swing trading standpoint, you know, NVIDIA is looking kind of like a nice play, and AMD as well. Uh, just keep in mind that for NVIDIA, one of the earnings they already beat, right? They had a good earnings. Yeah, they already beat. And AMD, sorry, I think AMD is something that we can take a look at. Their earnings were also good. They beat as well. So no dividend on this one like NVIDIA, but this is a another great company, growth company that I think is in a nice spot to do really well going into the future. NVIDIA and AMD have really done great things over the last few years. Um, and you know what? I remain bullish on them. I just don't have a position just yet.
All right, Yas had a last second question here. He wants us to take a look at Nike, so that'll be the last one. Wants to see if we think if it's forming a base here, but there's a gap fill on the downside. Well, yeah, absolutely. Looks like it could definitely go either direction at this point. Honestly, still kind of in a bit of a downtrend, if you ask me. Riz, what's your take on Nike here?
Yeah, this is something that 140 is a nice, great support. Uh, I feel like this is another great company. You know, people will buy shoes. Yeah, maybe not the crazy expensive ones, but people will still buy shoes. Nike is the leader when it comes to shoes and anything like that. So this is another company that I think do well. It was a bit too overdone when it was near the 170 area, and I would not be a buyer then. But at these levels, these are great. And for transparency, I feel like I'm giving away all my positions here, but I do have a position in Nike as well.
Well, there you go. Sounds great. Riz, I want to thank you for coming out. It's always a pleasure to have you on these webinars and to really get your insight, pick your brain a little bit, and it's really just a blessing. So thanks for coming out again. I really appreciate it.
Of course. Pleasure is mine. It's great to be on. It's always good talking markets and providing my thoughts. Hopefully, you guys enjoy them and they're helpful. So yeah, we'll keep at it and let's see how the markets roll.
Yeah, and just a quick mention, markets are closed on Monday, right, for President's Day?
Yeah, yeah.
Yep,
So
yep.
President's Day in the U.S. and Family Day in Canada. So yeah, no trading for better or worse this Monday, but it's going to be a short 4-day trading week this coming week. So let's see how this goes.
All right, sounds good. Well, everybody have a great long trading week, and if you have Monday off, congratulations. If you have to go to work like the rest of us, well, you don't have to worry about your portfolio. Thanks, everybody, for coming out. And again, if you haven't done it, make sure you click that like and subscribe button down below. We'd really appreciate your support. Have a great weekend, everybody, and we will see you on the next one.